please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Welcome back. An update on the Asian markets. While most of the indices are doing fairly well, the Nikkei was up about 0.7% when we last took a look at it. At the same time, we are getting in early rates from Hang Seng as well as Shanghai, both of them fairly in the green. With that, we go on to the macro picture now. Amidst rising fuel prices and a depreciating rupee, the Prime Minister is likely to hold a crucial meeting this weekend to take stock of the economy. A top government official told CNBC-TV18, and I quote, "We have to hold our nerves." According to sources, the government is of the view that it can't take panic steps on both the rupee as well as fuel. So the big question is, will the Prime Minister announce any measures in his weekend meeting? We spoke to the PMEAC member Surjit Bhalla and Pronab Sen, who is the former principal advisor of the Planning Commission, on whether it is time for the government to act. Their stance was very clear, and I quote again, the government should not react at this point. Let's hear them out.
There is no reason to panic, but the fact is that media has created panic. The fact is that the political system is making a massive issue out of it. So the government has to be seen to be doing something. And I think what the DEA secretary was doing was essentially what the Governor Reserve Bank should have been doing, which is talking the market up. The government has been very measured in the response, and I think they should continue to be so. If at any point the government is seen to be panicking, that would send just the wrong message at the wrong time.
They are sending the message that they believe that the fundamentals of the economy are really sound. They believe that the rupee level is not warranted, the current rupee level that we are seeing. And let's just look at the previous, and they have talked about or hinted that the FCNR, the foreign currency non-resident deposit bonds, are under consideration. Whether they are or not is not really or at issue over here. They are trying to communicate to the market that, listen, we are aware of what's going on, and very emphatically telling the market that this level of the rupee is not warranted by the Indian fundamental.
All right, so that's as far as taking stock of the macroeconomic situation is concerned. But this week, remember, marks the 10th anniversary of the big collapse of the Lehman Brothers, one of Wall Street's most influential investment banks. This was a key inflection point of the financial crisis in America, with a ripple effect across all the major economies. We spoke with Kenneth Rogoff, who's the professor at Harvard University. He said, while the USA is out of crisis, one can expect the third leg of crisis to actually unfold in the emerging markets. He also spoke about the impact the financial crisis has had in the rise of populism in America as well as Europe. Listen in.
The crisis in the United States has ended. The United States is actually growing very well. The crisis in Europe is still fading. They haven't completely resolved the problems in the banking system, the European Union. And in some sense, we're moving on to what might be a third leg of the crisis. You might even call it a debt super cycle, if that's not too fancy, which is hitting emerging markets, and we wonder whether something will happen someday in China.
Would you agree with the charge that, the banking community went scot-free?
I certainly would have liked to have seen at least one of the major banks beyond Lehman put into some kind of accelerated bankruptcy, nationalized, and then quickly privatized as part of sending a very strong signal that this isn't allowed. And I think it might even have been good policy. So you're right. They protected the banking as entities, as corporations. And it certainly sits very uncomfortably with people that there were no more serious penalties on some of the bankers.
Would you say that we may see more of populist nationalism, and much of it can be traced to the failure of the liberals during the financial crisis?
Well, I mean, it's a well-established empirical regularity that after you have a bad financial crisis, you get much more division in the political system. That's something that's happened in the past, and I think we're seeing it again. I think in the United States, the economy really is growing pretty well, and it's interesting to see how it will play out. Right now, the political divisions just get worse and worse, and you're right, Brexit could just be the beginning of what we see in Europe.
Welcome back. You're watching Power Breakfast on CNBC-TV18. Back home on Dalal Street, the market recovered in late afternoon on Wednesday after reports that the Prime Minister and his council will hold a high-level meeting over the weekend to take stock of the state of the economy. The Nifty reclaimed the 11,350 mark. The Sensex ended over 300 points higher. The mid-cap index managed to reaffirm its hold over 19,000. All of this because the rupee strengthened from levels very close to that 73 per dollar mark to very close to that $72 per mark. Anisha, yesterday was a holiday. Tomorrow is a holiday. How is the market likely to be today?
Well, yes, yesterday was a holiday, but a lot has transpired in the last couple of days in terms of cues for the Indian markets. And if you look at the global cues, they look more or less positive. If you look at the US markets in the last couple of days, on Wednesday, we saw a bit of rally, given there were reports that there's going to be renewed trade talks between US and China. And that's the reason we saw gains on Wednesday. However, yesterday as well, the market started off well, but during the day, we saw this tweet from Mr. Donald Trump suggesting that they're under no pressure to formulate any deal with China. And that's the reason the US markets ended off the day's high. Of course, still in the green because the Dow was up around 150 points and the S&P and Nasdaq also ended in the green, but off the day's high. Other than that, Apple share was the one that really pulled the markets higher. After the 1% cut that we saw on Wednesday, that one rebounded and gained around 2% yesterday. And in terms of economic data, that was also positive because the consumer price index came in at 0.2% versus 0.3% that was expected, keeping the view that there'll be 2 more rate hikes in the year by US Fed constant. Other than that, if you look at the European markets, well, they were a tad bit mixed yesterday. They reversed the early morning gains that we had seen after Bank of England as well as the European Central Bank decided to keep the rates unchanged. A little bit of underperformance coming in from FTSE because that one was down about 0.4%. That after Bank of England said that there's greater uncertainty about future developments in the EU withdrawal process. Remember, yesterday there was a cabinet meet as well in the UK, so that was the reason FTSE underperformed. But other than that, the Turkish Central Bank was also in focus. The markets, they rallied, and that the reason was that the central bank there raised the benchmark rate to 24% versus 17.8% earlier. Let's look at the Asian markets. Well, yesterday we had a solid close on all of these markets. Hang Seng saw a massive rally of around 670 points. Shanghai and Nikkei gained over 1%. And if you look at the early rates coming from Hang Seng, it's starting in the green as well. And the SGX 50 for the starter, suggesting a start close to 11,500 mark, almost 140 points higher than the close that we saw on Wednesday. Other than that, the other local cues that could support the markets today is the IIP data that came at 6.6%, which was steady. The consumer price index has gone below the level of 4% and that has happened for the first time in the last 10 months. So that is a bit of positive. And lastly, the biggest positive cue perhaps for the day is that crude prices have come back from that 2.5% gain that we had seen. It's now trading at that $78.3 per barrel mark, still high, but at least off the $80 that we had seen.
All right, Anisha, those were the macro cues. In terms of micros, what are the stocks you're watching out for?
Well, I'll watch out for SBI because they have decided to sell 8 accounts which had a total outstanding due of around 4,000 crore rupees. Voltas will be in focus because remember the launch of the home appliances business with Turkish Beko has been long delayed. It was expected to happen earlier in the year. It's happening now, and they have launched it yesterday, so that is a positive news. Engineers India will be in focus because they have considered a proposal for acquisition of 100% share capital of Projects and Development India, and that is from the government, so inter-government transaction, but that will keep it in focus. NBCC also has a similar story because they have been selected as a buyer for HSCC, and they'll be paying around 300 crores, something that the street already knows and has digested, but still we might see a bit of bump up in trade today. Other than that, Taj Mansingh has seen a long drawn legal battle, and now we understand that 2 bids have been placed for the Taj Mansingh Hotel, and Tata Group and ITC have submitted the bids. So let's see what comes out of that story. Other than that, news coming from the pharma space as Dr. Reddy's as well as Lupin has received some FDA approval for their drugs. Cadila Healthcare has also seen a final approval from US FDA for one of their drugs that will be in focus. Jain Irrigation has decided to acquire one of the businesses, which is called Smart Irrigation Pioneer. So let's see how the street reacts to that. Maruti has decided to increase the production of Baleno by 34% given the high demand that we haven't seen for that one. So a bit of bump up on that one. And lastly, let's keep a track on the rupee and the crude dependence given the strong move that we have seen in both of them as well.
Right, Anisha, thank you for that. We will keep an eye out on those whole host of stocks. With that, slip into a short break, come back. The big crucial meeting over this weekend. Prime Minister Modi likely to hold a meeting this weekend to take stock of the economy. More details on that. What could we expect on the other side?